Hi there, back again here with me Rati in Mami Beluga Investing. Today I'm going to discuss another company with the word Singapore in its name. The company is Singapore Technologies Engineering Limited, or commonly known as ST Engineering. The SGX stock symbol for this company is S63. My conclusion as of 2nd of May 2021 for ST Engineering is: first, it is a stable company with premium stock price, and second, it's in the midst of transformation for growth. How did I come up with these points? Follow my analysis throughout the video. A little disclaimer, this is an amateur video. My main intention is to record my journey, learning and practicing investing from scratch. This video should not act as financial advice, neither suggestion to take up position, buy or sell in the stock market. Please conduct your own research before making any financial or investing decision. Finally, feel free to put your comments, criticism, and suggestions in the comments section. But please be nice to me as this is my first series on analyzing Singapore stock. Okay, now let's take a brief look at ST Engineering profile. ST Engineering is a global technology, defense, and engineering group with a diverse portfolio of businesses across the aerospace, smart city, defense, and public security segments. This company was created in December 1997 as a merger of 4 listed companies. They are ST Aerospace, ST Electronics, ST Kinetics, and ST Marine. ST Engineering shares debut on the Singapore Exchange on 8 December 1997. Prior to 2020, ST Engineering operates in 4 strategic sectors. They are aerospace, electronics, land system, and marine. But going forward, it restructured into 2 customer-focused clusters. They are: first, the commercial cluster, which consists of commercial aerospace, urban solution, and satellite communication. The second cluster is the defense and public security cluster. In there, it has digital system and cyber, land systems, marine, and defense aerospace. As of 31st of December 2020, Temasek Holding is the majority of shareholder with 50.8% of the total shares. 30.1% is held by institutional investors, while 19.1% is held by retail investor. So that was a brief overview of ST Engineering company profile. Now let's look at their performance. To look at the company's performance, as usual, I will look at their earnings first. This works well with public company. It is my first indicator to see whether the company is a stalling or a growing company. It also helps me to decouple the company's performance with market sentiments. So here, let's look at the screen. I plot ST Engineering earning per share over the last 14 years. The data is plotted as round red markers connected with a thick red line. I've also included a horizontal dashed green line to indicate level 0. The earning below 0 means that the company is recording a loss. Okay, quickly we can see that so far, for the last 14 years, ST Engineering had not recorded any loss. The earnings are pretty stable, which is a good sign. However, seeing that the earnings hasn't been growing, we can also see that it's not a growing company either. It has a period of growth between 2008 to 2012 and slightly from 2018 to 2019. It also has a period of declining earnings between 2007 to 2009 and 2013 to 2018. The last earning decrease was in 2020, and I think it was contributed by the impact of COVID-19 pandemic. Okay, that was ST Engineering earning performance for the last 14 years. Now let's look at what are the perks for the shareholders, dividends. So here I plot the dividend history for the last 11 years from 2009 to 2020. The dividends data are plotted as red round markers connected by a thick red line. Each of the markers have been annotated with two numbers. The numbers above the markers are the dividend's dollar amount. The number below are the payout ratio with respect to its earnings. As a comparison, I've also plotted the earning as a thinner red lines. With a quick glance, we can see that ST Engineering is really generous in its dividend payout, at least in two occasions. They are in 2011 and 2020, where the dividend payouts are more than the earning per share. It was 104% in 2011 and 149% in 2020. It seems that there are periods where the dividend payouts are more rational to me. That is between 2012 to 2016. Dividend payout ratio jumped to very high from 2017, which becomes super high in 2020. This data makes me quite uncomfortable. While the rest of the dividend payouts do not seem to correlate that much with their earnings. So that was the dividend history for ST Engineering stocks. Now let's check if the share price is still reasonable. So to judge whether the ST Engineering share price is still reasonable, here I plot three layers of information. One of them, the market data, and three from the fundamental indicators. Now let's go through it one at a time. The first information is the price. This information is highly available, but most of the time doesn't reflect the company's performance. It mostly shows the market sentiments. So to compare with the company's performance, I plot one of the fundamental indicators in the same graph. That indicator is the earning multiplier, or sometimes called as PE ratio. Here I plot the 10 times earning multiplier as the green dashed line. Normally, for mature company, I will consider the fair value if the stock price is below this green dashed line. We can see in the graph for the last 10 years, ST Engineering stock had never been below this line. So this is the first indicator that the stock price is high. From comparing its price and 10 times earning multiplier, as we can see on the screen, it's clear that the price has an uptrend, even though no significant growth in the earning. The next layer of indicator is the 15 times earning multiplier. I'll consider the stock price to be really expensive. It is above this 15 times earning multiplier. Finally, the last layer of information is the 20 times earning multiplier. I consider the stock price to be super expensive if it's above this line. Now that we have the necessary indicators to decide the reasonable price, now let's discuss what's going on with ST Engineering share price. Okay, we can see quickly ST Engineering share price had never been reasonable, at least for my standard, for at least 5 years. There are several resistance pattern between 2013 to 2016 that the price was trying to break through 15 earning multiplier, while the second resistance is the 20 earning multiplier in 2019 to 2020. There were a large price drop in the first quarter of 2020 that was supported at 15 earning multiplier. Considering the market confidence to ST Engineering and its status as a blue chip stock, I'll place the market reasonable price now at 2.7 per share, around that number, on its 15 times earning. However, my most comfortable share price now will be less than $2 per share. Okay, now conclusion. So my conclusion for ST Engineering are: first, in terms of price and its fundamental, it is an expensive company. Then, however, there are some efforts to kick some gear for growth, which I will try to keep a close eye on it. Okay, that's all for today. Thanks for watching. Don't forget to leave comments and please subscribe to my channel. That's all. Goodbye.